What I would like to talk about today is the W pattern, trading the bullish W pattern. And the W pattern is, well, you'll find it hit and run candlesticks. I anyway, tend to follow certain patterns, and then we use candlesticks within those patterns to help with entry, exit, profit taking and such. And the W pattern is one of those that I'm very fond of. Now, really quick here, we need to go through a little bit of housekeeping and let you know that there's a high degree of risk involved with trading equities, and you know, bottom line, you've got to get out there and make some decisions on your own. And before you do that, practice. Try it with a non-cash account. Try it with a little bit of cash, moving slowly into trading the amount of money that you would like to trade. Bottom line, be very, very cautious and be very careful. Always trade with money that you don't have to have. In other words, don't trade with your rent money. Please don't do that. Also, all charts you see today will be complements of TC2000, so I'd like to give a big shout out to TC2000 and Warden Brothers to say thank you for allowing me to use your charts. Alrighty, let's get started. Again, my name is Rick Sadler. I'm the owner of hitandruncandlesticks.com. I would hope that everybody stop by, take a visit, and we'll get a little bit into that later on here. So there are basically three common types of W patterns, and right here is what they may look like. This W pattern right here, what I'm trying to point out is we have a low and a low creating a double bottom. The other pattern, and I'm going to move to this one rather than move to this right over here. The other pattern would be where we move down to make that the left side of the W. We create a low, and then we rally up for that high, and we come back and we create a higher low. Now, this one over here, this is my least favorite. In fact, if I'm flipping through charts and I see this W pattern starting to work or starting to shape up. Now, there's a difference between shaping up and starting to work. Shaping up, this black line right here, the hard right edge, it may not be quite as far as it is right now. It may be up just slightly, and I can see the W pattern, but it's my least favorite because we've actually made a lower low, and that's not what I want to look at. These are two of my favorite. There's not any one of these two that are my more favorite. They're both equal as far as being favorite. It's the whole idea is we have this low, and then we have a higher or double bottom low, and here we have the higher low. And again, that's my least favorite. Let me move over here. I'm doing this kind of different. Don't usually do PowerPoint like this, so bear with me. There we go. The bullish W pattern is usually viewed as a bullish reversal pattern, and this means that price has been in a downtrend. Now, price being in a downtrend, this right here could simply be the downtrend. You don't have to have some big old downtrend like this. Now, for the purposes of this very short and very brief webinar, we are talking mostly about stocks that have been in a downtrend, and in the end, or toward the end, you'll see what I mean when we start talking about the phases of the bullish W pattern, reversal pattern. But you don't have to have that big down move like, you know, coming into it. Another thing about the W pattern, when you think about it, it is simply nothing more than a negotiation between buyers and sellers. That's all it is. We've got sellers and we've got buyers, and they're negotiating. And what they're trying to negotiate is what direction they're going to go. Because we know what are some things that we know about the stock market? One, a chart won't stay still very long. It can move sideways, but eventually it has to do something. It can't just move sideways forever. And what that is, it's negotiation. So we've got a down move negotiating its way down, and then we've got an up move, the bulls, trying to negotiate their way out of the bears, and then we have another negotiation, and in this negotiation, we've made this high right here. And then we come down, and in this case, I just created a double bottom. And the bulls start negotiating back up like that. And once again, they all they're doing is they're batting the ball back and forth. And they're wanting to know who comes out the winner. Who comes out the winner? Which means who comes out of support, who comes out of resistance. I'm sorry, resistance and support. Let's try that again. Who comes out of resistance or who comes out of support? And not covered today, there is a scenario where a bullish W pattern is not bullish. It is actually a short setup. We don't have time to go over that. We'll do that in the trading room sometime when I talk about that. But really quick, the scenario there might be where we fail and we come down like that. That's probably not a no-brainer. Probably could have figured that one out. Let's move over here. There we go. The W pattern is not considered complete until price breaks out of the W resistance. So what we need to see is that W form, and I'll just draw it in there like that, and then that when it breaks out, what that's doing is that's taking the negotiations to the next step. There was a winner at the end of those negotiations. During negotiation in anything, there's no winners. There's you give a little, I give a little, you take a little, I take a little. There's no, everyone thinks they're a winner until that last negotiation, until there's a handshake or an agreement. And that's what happens here. When price finally breaks out of that resistance level, and that resistance level is when you connect these areas like this and you move across. When we break out of that resistance area, then what happens is that shows the winner, and the winner in this case would be the bulls. So this would be very tradable right in this area, very, very tradable right in here. Also I get asked a lot about can you scan? We do a lot of scanning for different chart patterns, and can you scan for a W pattern? Honestly, I've never found a scan, I've never come up with a scan that can actually give you a W pattern. What you can do is you can definitely scan for the downtrend, and you can definitely scan for a rally, and then you can definitely scan for the pullback. You just want the pullback to be above the recent low, and you would measure that by how many days ago. That's how I would do that. So say 20 days. I like to use 20 days. So I would measure that this low here has to be higher than the lowest low 20 days ago, and that's how I might measure that. And then as we start to move up, you can certainly get some coding to give you that up move. Where it becomes tricky is how to code in these breakouts, because you just don't know where that W actually tops out, and that's where some of it gets a little tricky. But there's one agreement with 99% of all the traders in our trading room is the best charting, the best way to find a chart is simply with your eyeballs. Flip through charts and find them. So we write code that gets us in a general area, then you flip through charts looking for them, and then when you find those bullish W patterns, or bullish W patterns where the right side is moving up, not quite at breakout. As it's moving up, you can clearly see the left side. You can clearly see the left side, or the bullish side before the top, and then you can see the bearish side. You can clearly see the bottoms. So when you start seeing this moving up, this is where you really want to put it on the watch list, or even aggressive traders might take that trade in here, and that certainly could be a trade. I prefer to take the trade up here. There's a couple of reasons why. Well, one main reason why, we're going to talk about that on the next slide, but this is where I feel the big money is made up in this area. But keep in mind, most everybody I talk to is a swing trader, because that's what I do, swing trade. So there are many charts where you can get them off the bottom with a double bottom, and you still have all the pieces in there. You get it off the double bottom, and this trade from here to here. So if you were to do something like this, that trade from this point up right there, that's what we call a boxed in area. And so the trade would be in two pieces. You might take that trade right in here, but as you got up to the resistance area, that's where you want to either step out of the trade, take your money, and when you think about it, hey, we see charts all the time where that move can be 10, 15, 20, 25%. I've never met a swing trader in my life that would turn their nose at those kind of percentages. But you want to protect that, so you can either close it, raise your stop up, raise your stop up and protect it. Take 50% off maybe, and again, raise your stop up. And then when you see the breakout, that becomes another trade, and this is the bigger money here. Because when you think about it, if this was all coming from a big downtrend, and you know what? You might even have a gap in this area here. So now when you break out of this bottoming construction area, and that's what a W pattern is. It's construction. When you break out of that, this is where the bigger money is. If this is, we'll call it 15%. If this is a 15% trade in here, this can be 30, 45, 50, 60% in this bigger area, because now you're coming in and you're filling in all this downdraft over here, and you're getting this launch out of the bullish W pattern. Remember, the bullish W pattern is construction, just construction. All right, here's kind of alluded to this a moment ago, and bottoms versus tradable bottoms. And one thing I've discovered over my career of trading, and I've had my fair share of losses, Lord, I have. And my biggest losses come from, or used to come from, trying to catch bottoms, trying to catch that trade right there, and have it rally up, and you might make this money in here, it comes up here and fails, and for whatever reason you don't sell it, and we've all been there, we all know about it. And then it starts moving down, and for a million different reasons we convince ourselves why we should stay in it, and as it moves down we end up selling it, and lo and behold, it gets another bottom, it rallies, it takes off, and we just want to shoot ourselves. Well, here's the thing about it. Oh, and one more thing. Many traders that I talk to, they have this thing about always wanting to buy the bottoms, always want to buy down cheap down here. And this is not always cheap. The bottom dollar, the cheapest item out there, is not always the best deal. And that's what I really want to point out here, is the difference between bottoms and tradable bottoms. I absolutely understand that this would be the bottom. If this was a chart, these are clearly the bottoms. There could be just one of them, but it's clearly the bottom. But what I would like to do is, how about this being the bottom? How about that? Let's call that the bottom. Let's call that the tradable bottom. Because what's happened now is you've allowed the chart to construct a bottom, and now you're trading off the construction. And that construction, the launch off the construction, if you think of this in terms of, say, house building, what does that do? You can see your house get built. But here you're just down there with that construction. Very important to have the construction. But why not think of that as your bottom rather than this? Rather than trying to pick the bottoms, rather than trying to make that trade right there, how about we let it break out, and then in normal fashion of all charts, what do? They break out, they pull back, they have to give a little profit take, and they come back and they retest that resistance, make sure it is support, and then what happens? It starts coming around, price, the buyers start stepping in a little bit, price starts moving up, and lo and behold, we've got ourselves a nice bull run here where we could definitely be trading above the bottoms, but more on a tradable bottom. Please don't get me wrong. There's a ton of money that can be made in this area right here. I'm just trying to point out another bottom, and it's what we call a tradable bottom. There are 4 phases to the bullish W pattern, and the first one, price is in a definable downtrend. Again, I said when we started out that today this will be on charts, W bottoms, where price has in fact been in a longer downtrend, not just a little bit of a pullback and then a W pattern forms. That's definitely another bullish W, but we're talking mostly about the stocks that have been in a definite downtrend, kind of like what the market is right now, actually. Yeah. So that's where we get the definable downtrend. The longer the downtrend, the more powerful the W pattern, and the higher the profit potential. Remember, I mentioned that when you have I'll just draw right here. When you have a big downdraft, and then the double W pattern forms, and you start coming through that resistance right there, when you break out, this could be profit potential. Now we don't know, one thing you don't know, and every chart you have to look at each chart, but the length of that downdraft and how many little rallies did it have moving up, because those all become possible reversal areas. Probably should have just drawn them straight out like that. And you can see the difference in size. You can see this from this low to this high, this low to this high. See how much distance you have there? Look at the distance you have here. So, and here again, this is where I find people, they get involved with trading, and they're taught, I mean, we all are, we're all taught from an early age to buy low and sell high. Unfortunately, we've never been given a really good definition of what is low. What is low? Is this the low, or is this the low? For trading, a tradable bottom up here after we've broken out of that resistance. Here's another thing too. Many times, let me draw another line up there. And I'm going to kind of draw this like that a little bit. There we go. So here's a trend line. Price keeps butting its head. Price can't get over. So what we could do now is we could draw a straight line like this. And now price pops up. And through here, by the way, you may start to see that W pattern. I probably should have drawn that in there. Some sort of W pattern in there. Reversal basing is what it would be. It would be just a basing, construction base down there. And again, we're looking for that W pattern. As we break out, guess what else this thing does? It now breaks out over that trend line. So you've got so much going for you after that breakout, rather than trying to put all your efforts into buying the construction area. Buying the construction area is rough. You certainly make money at it, but the big money is after that breakout, and then we typically get the rallies, the pullbacks, the rallies, pullbacks, and so on as we move up to the next resistance level. Now, the left-hand side of the W pattern forms when price I'm sorry, when price finds support and rallies. So it's all about all about that support. Let's here make that blue. So we come down, and then we move up. This would be our left-hand side. We come back down, and right here, that becomes support for creating that right-hand side of the W pattern, and where the rally when the rally starts moving up, and then the drop starts moving down at that top in that, and usually it's an area. It's not. I don't know that I would always use the very tippy top. It's an area you could probably find in there. That would be the area of resistance, and then we have that W pattern. Do W patterns always look like W's? No, because you're going to have price going in and out. You're going to have noise all over the place. It's going to look very jagged. But if you look closely at a chart, and we're going to look at a few charts here in a moment. If you look closely at a chart and then you kind of back up and you just sort of you just look at the chart, you'll be able to see those W patterns. You just have to be able to draw outside the lines a little bit, or allow the price. We use candlesticks, so you would allow the candlesticks to drop outside of your lines. And then of course the breakout is when when the right-hand side breaks out up over that center point, and that starts that bullish run, and it also starts that tradable bottom right in there. All right, let's look at a couple of charts. I think this is the fun part anyway. This is the part that makes some sense. I decided today to use charts, what we call naked charts. When you have a canvas and just candlesticks on there, we call that naked charts. No lines, nothing at all, because I think that allows you to see the W pattern a little easier. You can see the down move here, so you can see we're coming down, and then you see we rally up, and then we rally back down, and then we rally up, and right there, you can see that it broke out and ran. Now, I just realized usually I clip this off the prices, because I don't want to get tied up into well, what is this chart, or what's the price of the chart, or anything about it, because that gets us sort of off the education side of things, and that tends to put us in the, hey, is that a trade that I can trade today? And many of these were actually clipped from very recently, and we're not here to look for, is there a chart I can trade today? What we're here for is how do we trade that W pattern? So there's our down move. There's our big pivot point up there. And can it be bought? I mean, a doji, kind of a little gap up there, nice consolidation anyway. Can that be bought? Absolutely, that can be bought. Would you have known it was going to gap up? No way in heaven's name would you know it was going to gap up. But you can see that after the gap, it just took off and it started running. And that gap, what are we looking at here? $2.44. This thing ran to $9. Holy moly, that's a ton of money right there. That is a bucket of money right there. So you can see down, we have support, we rally up. Oh, another thing too, it's always very, very helpful when you see the bullish W pattern, look for some candlestick signs, which, let me back up. Don't look for candlestick signs. Look for price action signs. The problem is you can best see it when you use candlesticks. When you're using candlesticks, that's all you're doing. You're looking for price action hints, seeing how price action is the #1 king indicator in all charts. All indicators are derived from either one or two things, price or volume. Price outweighs volume 10-1. Follow what price is doing and you'll follow what the chart is doing. So when you start seeing things like a bullish Hiromi, you see a little doji and then a rally, a doji continuation pattern here. It rallies up, it pulls back, and notice we have a low, a high, a higher low, and then from there it takes off. There's where we want to start looking for all those candlestick signals in there. to give us confirmation to ourselves, as well as uh, the chart showing us confirmation. And also this candle here, see how we pulled back? And this is where you want to kind of get in the habit of drawing support lines. And if this was your area of support, because it was resistance right in here. Notice how fat my line is, by the way. I would always draw fat lines. Use crayons, not sharpened pencils. Use crayons. So as we come up, that's our top, the middle of our W. We break out, and then we start breaking out. There's where we want to be a buyer, maybe some buyers in here. And you see how it pulls back? As long as it stays above that support, this chart's still very much alive. And it got a little nasty. I mean, that's a fairly good candle, but if you think about it, that was a pretty nasty looking candle throughout the day until it came back up and closed up bullishly. But from there you can see how it ran. And then again, if you, well, let's see, let's think about some profit taking. If you bought this at $2.44, as it moved up to $9.60, quite honestly, I don't even know what that's got to be a crazy percentage amount. How much is enough? You know, let's think about profits into strength. So as this thing moves up, you might want to think about those profits. Let's take a look at another one here. Oh, and I have this one in here because it's very important to always point out that not everything is a winner. There are losers out there. There's not a stock chart. There's not a charting program. There's not an indicator. There's nothing that's 100% guaranteed, a surefire, hey, that's the holy grail. It's just not out there. If it was, we would all have it, and trading would be boring because everyone would have it. So there's just no such thing. So like all chart patterns, indicators, whatnot, chart patterns, they fail, and you have to respect that. So here's one I found that we're down, we're up, we're down, we're up. Whoops, what happened? Now, we actually could have come down to here, and if it would have bounced up, we would have been okay still. We still would have been, because if this started moving up, let me change the color here. What do we have? Do we not have a bullish W pattern there? We've just simply moved over one area, one line. Now, and now we're starting to fine-tune the chart a little bit more, but the bigger chart, I think you can see the W pattern. So just move that over if we started to move up, but we didn't. What did we do? We failed support. When you fail support, the trade's off the table. Let it go. If, you know, I wish I had more camera here. Let me, you know, I pointed out my least favorite W pattern. My least favorite is when you have a low and we come down for a higher low. Let's see, how much do I have? I've got that much. Let's drag this over. Let's say we pull down into this area here. So we have a low to a low, and then we start moving up. Could we actually see a W pattern there? Let me change the color. W. See, that's just like that W pattern that I showed you was my least favorite. Now that's my least favorite. And the only way this down here would get back into, say, some bullishness is if it started coming back up over this well, what is resistance now. If it came back up over these lows right there, then it would be back in that bullish W pattern category. But it would have to come back up. It's not down here that it's bullish. You may have a bullish candlestick signal, you may have all the signals in the world, but you can't get back into that bullish W pattern until you come back up over these lows right here. So I don't know how many more of these I have. Here's another one. Here's another one. Not quite as deep. Not quite as deep. And see, this is where, you know, if you go looking for W patterns, sometimes they just don't stand out. They just really don't. And think about it this way. To have a double pattern, a W pattern, you pretty much have to have a kind of a double bottom. You pretty much have to have kind of a double bottom. So we're down, we're up, we're down, and you know, I don't know how much a person wants to get technical. There's down, there's up, how much we're going to fight the chart, or are we kind of stepping back and looking at the broad strokes. I look at this and I'm going to step back and look at the broad strokes. We have a low, we have a higher low, almost a double bottom. I always count double bottoms and higher lows. They're the same doggone thing. They're doing exactly what I want them to do. Just low, high, support. That's what you're looking for. Low, high, support, double bottom, lower high, and then start rallying up, and right there would be the buy. Of course, we all know that there's aggressive traders out there. I'm one. I know many people that are. So we take risk. We come in here and we might buy in this area because we can see what the pattern is doing. And you know, if you trade a pattern long enough, you get to a point where you can see how it's being built, and when you can do that, that gives you confidence. When you watch it 100 times, it gives you that confidence to reach in there and take those trades a little early, because you might see, hey, we're getting a higher low on a little bullish engulf with a little tail. You know what? I'm going to take that with anticipation of being a bullish W breakout, but I'm going to lay my stop in there because I am a wise trader. I'm going to lay my stop in there because what would tell me that this chart is no longer any good? Well, or I shouldn't say any good. What tells me my plan is not working? Well, if we started moving down below this low right here, that would tell me, uh-oh, that wasn't my plan. Now, can this still actually end up being a bullish W pattern? It could be, but that wasn't my plan. You can't change plans too much in the middle of a trade. If you do, you're just kind of justifying your mistakes, so you don't want to do that. So that's a nice bullish pattern, nice bullish W pattern. One more here. Here's another one. Let me draw this out. Maybe you've already spotted it. I'm going to box it in first. There it is right there, and you can see it there. See how I'm taking the bigger strokes, the broader strokes? I'm not coming in here going, I'm not doing that. I'm taking the broader strokes. I find that, and it's because we're not chasing, we're not micromanaging the chart. We're not micromanaging the day. We're going after a bullish W pattern, and it's what I see when I back up a little bit and I get away from that micromanagement. And you can see how it did pull back here, and you can see how it's continuing to move up. Notice that pullback is right into that support area. Let's see here. Here we go. Here's a nut. Whoops. Oh, I had the same slide on there twice. Sorry about that. Same slide. W pattern right there. Trick slide. All right. Let's see. That's it. With 45 minutes, it's kind of hard to do a full-fledged webinar and look at enough charts where we can look at some actual entries and exits, actually look at target areas. It's very hard to do that in 45 minutes. So what I will be doing is this W pattern webinar, a full-blown webinar over there in our trading room if anyone's interested. I would like to ask if anyone is interested in receiving our featured trade idea, if you go to our website, and I'll point that out where it is in just a second, and register for the free trade idea that I send out every day. And as a gift of thank you, when you do that, you will receive access to the trading room for the rest of the month. And I just want to say thank you. There's a few other little goodies in there, kind of like a little goodie bag that you'll receive. If you want to go to the Hit and Run Candlesticks website, and if you click just underneath the bold and the bear, you'll see free trade ideas and updates. Click here. If you click there, fill it out. I think it just asks for your name and email address, and you will be on the featured trade idea list.